comments contained in this podcast do not constitute legal advice. The opinions herein are the opinions of the speakers and not the official opinion of the Hodgson Russ Law Firm. Hey there, tax fans. Welcome to State Tax Talks with me, your host, Joe Tantillo. I'm a tax attorney at the Hodgson Russ Law Firm looking to explore the nuances of state and local tax law. Here on the show, our goal is to keep tax informative, simple, and fun. So if you're ready to talk tax, turn up the volume and dive into this episode of State Tax Talks. Hey there, folks. Welcome to another episode of State Tax Talks. I am your host, Joe Tantillo, and I am joined once again by my colleague, Joe Endres. We've been talking about abandoned property, what it is, New York's rules for how to report it, stay compliant, and today we're going to be talking about what happens if you get audited for failure to report your abandoned property. It gets pretty complicated, and the rules are interesting, to say the least. So welcome back to the show, and I hope you enjoy the second part of this conversation on abandoned property. So I'm a business. I get audited. I have been filing my annual reports. What is this going to look like for me? How do I prove my compliance? What do I have to show to an auditor to demonstrate due diligence and avoid them using that extrapolation and saying, we think the records are okay this year, but you don't have the records. And we'll talk more about specific record keeping later, but I'm interested in, how do you approach it?
Yeah. So we usually approach it by doing our own kind of prophylactic audit internally so that we know if there are any issues and how bad they are ahead of time. But we kind of run our analyses ourselves internally. So we'll ask, okay, let me see your general ledger and let me see how you're treating customer credits. Let me see, are you ever writing them off and taking those into income? Because evidence of that will show up. And auditors will ask, okay, well, let me see your kind of credit reconciliation so that we can see every single credit, where it arose and where it was applied to the customer account. If you have any outstanding, how old are they? When did, they shouldn't be any more than 3 years. Otherwise, they should have been escheated. And another big request that comes up in almost every audit for a type of record is your check reconciliation with the bank. Mm-hmm. So they want to see it. If you sent out a check to pay an employee or to pay a vendor of yours, show me the reconciliation report that you received from the bank showing that check was cashed. And to the extent you don't have your check reconciliation reports dating back 10 years, you could have a problem. Those are the biggest areas. They're going to start with the general ledger, check reconciliation reports, and go from there.
Yeah, I know we're talking about the audit phase still. Do these cases ever get litigated? Is there a BCMS equivalent for abandoned property? I mean, are you stuck with the auditor's determination at the end of the day?
Yeah, there's very little case law out there. I mean, there is kind of an informal appeals process, but I'll be honest, it's nothing like, if you're used to dealing with the New York State Tax Department, where we have kind of the informal mediation, the formal Division of Tax Appeals, then state court. I mean, there are a few state court cases. You can always bring a Article 78 action, contesting a government action, et cetera. But the appeals process is nothing like what you're used to dealing with in the tax department.
So we have aggressive rules, ranked, rules that are ranked to be terrible and aggressive, complex procedures for proving due diligence and compliance and books and records, and a very limited informal appeals process with not a great depth of case law or, advisory opinions.
Yes, it's the Wild West, man.
I get the D- makes sense. I would have given it an F based on all of this. So, let's segue then into practical considerations. You haven't been audited yet. How do you even begin to prepare for an audit or think about your compliance, et cetera? And you mentioned that we sometimes do prophylactic audits for people that reach out to us. But if you're a business owner and maybe this hasn't been on your mind, what do you got to start thinking about now?
Yeah, the two biggest issues that come up, again, during the audit are, did I think about all the different types of abandoned property? I can say, no, I don't have any of that stuff that you were talking about, but did you think about everything? The table of property types that I mentioned that's on the comptroller's website, it's like 5 or 6 pages long. So there's a lot of different, now a lot of those won't apply. Again, a lot of those are specific to insurance companies or banks, et cetera. But, if I'm a business owner and I want to think, well, am I in any type of trouble or do I have anything to think about? the first thing I would ask is, well, do you have any abandoned property, right? Do you file reports regularly? If the answer to that is no, the likelihood that you don't have any abandoned property, probably pretty low as well. So there might be something there. But the first thing I would do is go to the controller's website and start looking at the property type table, because I would just go through to kind of jog my memory or recollection to make sure I'm thinking about all the things that the property types that an auditor could ask about, to see, well, how do we handle this? How do we handle this? What happens if I have something outstanding? Are they all eventually accounted for, and do they eventually get to the actual owners of the property? To the extent the answer to that is no, and certainly to the extent that somehow it ends up in income or you end up keeping it, there's a problem.
So with that in mind, then, what records do you need to make sure that you have thorough copies of? This is, again, a question that I formulated before we were deep into our discussion. How many years back should you be prepared to go as well? I mean, it sounds like you need not only adequate records, but like years and years of records, just in case this, one of these audits happens and you've been non-compliant.
Yeah. And look, I mean, there is some benefit to filing a return. So we often counsel people to file a return, though there is no statute of limitations. The burden of proof kind of shifts a little bit in New York if you do file a return. So the burden kind of goes to the state a little bit in that respect. So it is good to file returns. I would counsel people to file 0 returns often, saying, look, I just to at least let the state know that I've looked at this, I'm considering it, et cetera. But in terms of records that you need to keep, again, it's primarily the general ledger, then any of the transaction documents that occur with respect to the general ledger. And that includes bank statements, bank check reconciliations. That includes also, if you're going to say something isn't abandoned because there was a communication, proof of that communication, not just a note saying I had a phone call. You got to follow up with a letter, ideally. Most auditors, if they're being reasonable, are now allowing email. New York now allows email after not allowing it for a while. But those are the type of records, like at a high level, that you'd have to be concerned with being able to provide. Now, look, if you don't know business is going to have records for 10, 20, 30 years ago, if it's been around that long, but you should have it, hopefully for at least the previous 6, because that gives you the 3 years of current records plus the 3 years beyond, which would be abandoned at this point, right? So the state can look at both your current non-abandoned practices as well as a period that is subject to escheat or abandonment under most property types. So that is the period of time that I would focus on, and that's the period of time that most audits will focus on.
Gotcha. So what does an audit timeline for an abandoned property audit look like, kind of soup to nuts? I presume that, like a tax audit, it starts with some sort of letter or notice that they're going to be taking a look at everything. And, what can I expect if I'm a business in terms of how long is this going to take and how much time and effort is it going to take? Yeah,
I mean, it really depends. I mean, it does follow the same kind of broad outline of a tax audit, in that you get congratulations, you've won the audit lottery.
The love letters, yeah.
The love letters, right. And that's going to contain a bunch of information that they're going to request, the documentation that they're going to want to see. You're going to do what you do in most tax audits, right? You're going to call up the auditor and say, hey, you don't really want all of this stuff all in one big data dump, right? Like, what can we do how do we take a first bite of this apple? What do you want to start the audit? And you start that kind of conversation back and forth with the auditors. They're going to want the GL, the general ledger. They're going to want, a chart of accounts to let them know kind of where everything is. They're going to want the bank reconciliations, no doubt. So be ready with that stuff, because that stuff will be pretty early and high on their list. But from a total time commitment standpoint, it really depends on the audit. Meaning, if you've kept good records and you've been filing abandoned property returns, then you can get done with this thing in 6 months, or thereabouts. If it gets really ugly and the auditors find abandoned property and they, you haven't been filing and they're going to extrapolate, you're a family business that's been in business for generations, those are all very difficult facts that can cause this to be, much more drawn out and occur over a longer period of time.
Let's say I am a company that's been in business since, the 1800s or the 1700s. Are they limited at least by, like, when these laws were written, or do the laws grant them the power to kind of go back retroactively?
They do, as a practical matter, limit it to around 1992.
Okay.
So it's still a long ways out, but no, they will not go back to the 1940s and 50s.
Gotcha. Yeah, I imagine it would be difficult to get records from back then, as we know, at least from the sales tax context, how difficult it is even to get records in the pre-digital era when you have older sales tax audits. So
Yep.
The 90s. Eesh.
Yep.
Was when I was born.
That's around the time I had my paper out, the early 90s, late 80s.
All right. We already talked about penalties and interest, but I just wanted to circle back to it for a minute. So it's really $100 a day from when the property should have been.
So that's what's statutorily allowed.
Right.
As a practical matter, do they really impose that? Not typically. I mean,
Okay.
You really have to be kind of a bad actor for them to want to impose and end up sticking to their guns and imposing that penalty.
Mm-hmm.
Most of the time we get the penalties abated. And in fact, I should say this about the voluntary disclosure program for abandoned property. Unlike a tax voluntary disclosure where you pay the tax and the interest, for abandoned property, all you pay in New York is the abandoned property. No interest, no penalties. So they will abate all of it. But again, it's a 10-year look back, not a 3, 4, 5-year look back. And you have to be careful with the voluntary disclosure because it can, as well as the audit. I mean, these things, the nightmare scenario is when you're a business and you are in a corporate family with many other entities and none of them have filed abandoned property returns.
Right.
That audit can bleed into other entities and the voluntary disclosure can bleed into other, if they decide to review it, that can bleed into other entities. So, you have to be careful that you take a holistic approach to this if you're audited or if you're going to take advantage of the voluntary disclosure program.
Yeah, I imagine that the fact that there's no exclusion for the business-to-business transactions can really complicate things with a multi-level business that is even trading with itself. Could you have abandoned property between two businesses that are technically related on paper?
That's an interesting question. I mean, at the end of the day, they're separate legal entities. So yeah, I think the answer would be yes. But if both are owned by the same beneficial owner, I've never come across that situation, but technically I think you would be able to because of the separate legal existence of the entities.
I hope I haven't given New York any ideas.
Right, exactly. Way to go, Joe. It's a whole new audit program now.
Let's just talk a little bit more about the voluntary disclosure process. I think it'd be, beneficial to kind of focus in on that as we start to bring our conversation to a close. Is it similar to, the standard voluntary disclosure process, prepare an application, wait and see if you get accepted, file the returns, et cetera?
It's somewhat similar, but it's also a little unique in that you actually have two options. You have kind of a more formal option where you sign a voluntary compliance agreement, and it's more of like the formal voluntary disclosure that we're used to dealing with New York State.
Right.
But then there's also this other option, which is kind of like what they call a self-directed voluntary disclosure, which is a little more streamlined. It's a little quicker. It's the way that most businesses end up engaging with a voluntary disclosure, just because, again, it's faster and it puts more of the onus on the business to get it right. And, generally there just isn't as much review by the controller's office using that process. Mm-hmm. So that's the way most voluntary disclosures proceed under that self-directed.
Well, I think this is as good a place as any to kind of bring this conversation to a close. And it's been fascinating. For me, I've learned more about abandoned property in the last 48 hours than in the prior, however many years of practice I have at this point. And my mind is a little bit blown by the complexity here and the compliance risks at play if you are not paying attention to this issue. So, I can see why it fascinated you to begin with, and why you kind of figured that this might be a good area to understand how the audits work and how to defend them.
You're just being nice.
No, and I'm being genuine. I mean, this is one where if I were a business owner and I ran into a problem of this nature, I would want someone who has spent some time doing this and talking about this.
Well, that's kind of like my parting thought would be, look, to any accountants out there listening, any other tax professionals out there listening, just ask the simple question. What do you guys do with uncashed payroll checks? What do you guys do with uncashed vendor checks? What do you do with customer credits? If abandoned property isn't a component of that and they're not getting everything back to the rightful owners, there's a problem.
Those are excellent parting thoughts, and I think we'll leave the listeners with that to ponder. If you think that abandoned property or failure to report abandoned property could be an issue for you or your business or a client, you know where to find us. You can email us, you can call us. Feel free to reach out. And if you, like me, are all of a sudden wondering if you have, abandoned property out there, then maybe you can go and claim. Go look on the comptroller's website in New York or whoever runs this in the other states that have abandoned property. Sounds like pretty much all of them. 50,
Yep,
or 57, as you mentioned, with the Guam and the 3 Canadian provinces.
Yep. DC, Virgin Islands.
Well, Joe, thank you so much for joining. It's always a pleasure to have you on the show. I feel like I learn something new every time you're on. I hope our listeners do as well. Any final words of wisdom for the loyal followers out there?
No, I think I'm all set. I think, we've kind of done a pretty good kind of initial dive into abandoned property, and thanks so much for having me back.
You're very welcome. Well, folks, until the next time, this has been State Tax Talks. I have been Joe Tantillo, and we'll see you real soon. Thanks for joining us for another episode of State Tax Talks. If you're interested in listening to more episodes, we're available on all platforms where podcasts can be found, including YouTube. If you enjoyed this episode of State Tax Talks with Joe Tantillo, please give us a 5-star review on your favorite podcast platform. And if you're in need of a tax professional, you can contact the tax attorneys at Hodgson Russ. Go to www.hodgsonruss.com for more information. And until next time, I'm Joe Tantillo, and this is State Tax Talks. Catch you later, tax fans. The comments contained in this podcast do not constitute legal advice. The opinions herein are the opinions of the speakers and not the official opinion of the Hodgson Russ Law Firm.